Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. So here's the latest this morning. The future of the Federal Reserve in focus as investors anticipate policy changes once former Fed Governor Kevin Warsh returns to the central bank. Joining us now to discuss is Marc, the former Chief of Staff to former Vice President Mike Pence. Mike, welcome back to the programme. Let's go through some of the details and some of the endorsements we've had over the past few days. Geeta Gopinath, Mohamed Al-Erian, the Prime Minister of Canada, Mark Carney, and the list goes on and on and on. Is Kevin Warsh a pretty conventional Republican pick to lead the Federal Reserve?
Look, I think he is. He's somebody who's been on the Reserve before, and I think that of the options, it's a pretty strong pick for the president. I know there's some people who question, what these hearings are going to be like when he gets there because of positions he took against quantitative easing after the financial crisis and reconciling that with a very dovish approach now. But look, if the Senate can confirm Tulsi Gabbard to DNI and Kristi Noem to DHS, I don't think it's going to be much of a challenge for them to confirm Kevin Warsh here to the Fed.
Mark, you were in the room in Trump 1 when the debate was going on who Trump was going to pick, and he ultimately landed on Mnuchin's pick of Jay Powell, which I know was not VP Mike Pence's choice. What do you think went behind this process, why Kevin Warsh was picked and not the other Kevin?
Well, look, I think there were basically three finalists in the last go-round. There was Jay Powell, there was Kevin Warsh, and there's John Taylor. And I think that there were different camps aligned with each. But the reality is that Steve Mnuchin made the appeal to the president. Then when the president asked, he said, who's going to keep rates lower? And Mnuchin was clear in saying it would be Jay Powell. And I think that's what the president was looking for. It was less of a question about sound monetary policy. It was a question of who's going to push for lower rates. And, there's an irony, of course, now that the president is upset with Jay Powell for not having rates lower. But I have to believe that there's been, that same conversation has repeated itself this go-round. And I think there's probably been assurances that Warsh is going to adopt a dovish approach here.
But that's why it's so precarious, given the fact that when he was at the Fed, he actually was calling for a hawkish, tighter monetary policy. Do you think his views have truly evolved, or is he just trying to be politically correct in the moment to get a job?
I don't know that I can put myself in his shoes and know that. I think that I do think he has certainly the credentials here. Again, as I said, of the options, I think there's probably a lot of comfort on the street and comfort in the Senate that this is where the president landed. And he is going to have to address the apparent change in position from where he was after the financial crisis to where he is today. But nonetheless, I think that he's going to have a term that's going to extend far beyond President Trump's term, and so he perhaps is playing a long game here too.
Mark, I'd love your take on what we heard from Thom Tillis, the North Carolina senator who seems to not care at all since he's not running for re-election and is going to block the process until the DOJ lawsuit or complaint against the Fed is lifted. Do you think that he has more popular support among sitting Republicans than he did maybe a couple weeks ago, not just with this, but in general?
He probably does. I think there are others who are applauding some of the positions he's taking, but feel they can't take the same because they'd be concerned about their own reelection options. But, I think that as it comes to, he's going to block this until the investigation is concluded on Jerome Powell. I think most people assume the investigation of Jerome Powell is less on the merits and more an effort to pressure the Fed to lower rates. And so at the end of the day, is the White House going to say, we're going to continue the investigation, or we're going to say, hey, we've got our own guy now to run the Fed, so let's pull back on the investigation. It seems like at the end of the day, it seems to me that this is not something that's going to continue into next year, as potentially the president suggested, on Air Force One the other night. It seems to me there'll definitely be a desire to pull back on the investigation to allow this to move forward.
I guess I was getting at something bigger, especially because we are in midterm year where we're going to be getting a government shutdown evidently every 2 weeks. And I'm just wondering, Marc, going forward, at what point you start to see Republicans look at either distancing themselves from President Trump's policies? Are you seeing any groundswell of that, especially after the special election in Texas, after the midterm outcomes? Are you seeing anything like that, or is it sort of a case-by-case situation?
I think it's more case by case, but I think it's going to continue to ramp up, I would say, over the course of the year. And it's not just Texas. I mean, there's been a series of special elections in deep red states of Mississippi and Georgia in which Republicans have been defeated. And so there's clearly a trend building at this point. And there's no doubt that other Senate Republicans are recognizing that. However, they also know that the president has enormous sway over the base, and particularly in primaries. And so I would look to see more Republican senators distance themselves after you get through primary season, but being reluctant to do so until they've secured their nomination, and then that's behind them. So yeah, Tillis is in a different position. I don't anticipate you're going to see too much more of that in the short term, but perhaps toward the summer months, I think as members look toward the general election in November and they're behind their primaries, that's when you'll begin to see more members begin to perhaps take positions similar to Tillis.
Marc, on a final note on Kevin Warsh, the president spoke at a dinner over the weekend. I'm reading a quote Washington Post had. Someone in the room actually said to me, all of this is accurate. Quote, if he doesn't lower interest rates, I'm suing his ass off. And then the president says, I'm kidding. Marc, do you think he's actually kidding, or is Kevin Warsh potentially going to face the same fate as Jay Powell if he doesn't lower interest rates?
Well, I think he would face the same fate if he didn't lower interest rates. But again, I think this process has played out for a while. It's pretty hard for me to see that the president would not have moved forward with this nomination unless he had pretty strong assurances that Warsh was looking to lower rates when he got there. And so yeah, I think he would. If he didn't, I think he would face the same pressure from the president. I think the president's somebody who likes lower rates for lots of reasons. He made his resources in real estate. The president believes that it's better for exporting and for manufacturing base if the dollar is depreciated. And I think he knows the impact on equity markets when rates are lower. And so I think he wants to continue to push for that agenda, regardless of who the personnel are inside the Fed.
Stay with us. More Bloomberg surveillance coming up after this. Andrew Hollenhorst of Citi says this: the employment data is unlikely to materially change the outlook for the labour market. We expect a solid 135 added in January, and the unemployment rate remaining unchanged at 4.4%. Andrew, that puts you at the top end of the estimates for this coming Friday. Walk us through why you're looking for that, but also looking for 75 basis points of cuts through the year.
Yeah, top end of the estimates in terms of where that payrolls number is going to be. But it goes back to what Lisa was talking about, what you were all talking about, which is what does this data really tell us about what's going on in the labor market? So we know we have these issues with the birth-death model. I would actually agree with Steve Englander that if we get a big update to that birth-death model, you could get a zero or a negative number. And I think that's where the underlying pace of job growth is running, somewhere right around zero. And that's what we had Governor Waller talking about in his dissent from the Fed staying on hold last week. So it's a complex job market, is a complicated situation and complicated data. But I would go back to that survey that the Conference Board puts out, and they just ask people, do you think jobs are plentiful or do you think jobs are hard to get? And month after month, people are telling us jobs are becoming harder and harder to get. So I think it is a loosening labor market. Lots of statistical issues. Residual seasonality used to be something people would look at me very funny when I said. Now people are all familiar with it. Every year we get stronger jobs data at this time of year. We're building that into our forecasts. That's why we have 135,000.
What do you think break-even is? What's the break-even rate?
I think the break-even rate, with the way that the data are adjusted now, it seems like we can run about 50,000 jobs per month, and 50,000 jobs per month as reported by payrolls is leading the unemployment rate to stay stable where it is. But there is a question about that 50,000. Should you be subtracting something like 60,000 from it because those payrolls numbers keep being overstated? We'll get more information about that today or on Friday when we get the new report. So that break-even has slowed down. But again, I think that the key thing here is, do we call a job market strong if we have essentially zero increase in labor supply and zero hiring? I don't think that's a strong labor market.
Can you have a strong economy, though, if you don't have a strong labor market? I mean, this has been sort of a feature of the entire market for a while. The labor market has been sluggish at best, and yet the economy has continued to grow pretty dramatically. So at what point does that become a hamper, potentially, to any kind of further acceleration?
Yeah, I think eventually it does. I mean, there's growth, and then there's whether it's broad-based growth or fairly focused growth. And to the extent that we're getting growth from things that are AI-related, software and data centers, a lot of those kinds of areas of investment spending don't actually generate a lot of new jobs. And so that eventually becomes an issue for the economy. In the short term, you run strong growth and you can have weaker labor market. I think that's what we're seeing right now. But eventually, people don't have the wage income to purchase. And if you look at consumer spending, it's holding up, but it's holding up because the savings rate keeps going down. People are saving less and less because their incomes aren't tracking with that consumption. So eventually it's an issue for the economy.
You still think that the Fed is on track to cut by 75 basis points this year, even with Kevin Warsh potentially being the Fed chair? Why not more, given some of the proclamations that we've heard from certainly President Trump as well as Kevin Warsh, and considering the weakness that you see in the labor market?
I think the risks are that we do end up with more cuts than 75 basis points rather than less cuts than 75 basis points. The reason I think 75 makes sense as a base case is, although the labor market is softening and loosening, it's happening very gradually. So if we just project out that gradual loosening of the labor market, the unemployment rate will move up just a bit this year, inflation will come down a bit this year, and that would mean that the Fed should just ease policy rates by a bit this year back to something closer to neutral, which 50, 75 basis points lower would be neutral. I think that should be the base case. The market has about 50. I have about 75. But what's the risk? The risk is that when you're in an environment where hiring is so weak, if there's any pickup in layoffs, that unemployment rate is going to shoot up, and then we'll get more cuts.
Well, you haven't changed your expectation, even though we have a new nomination for the Fed. So do you think a Kevin Warsh is going to be data dependent, given what you're basing this off as the data that you expect to come out?
Yeah, it's not just Kevin Warsh, and I think that's an important point, that it's the committee as a whole. That committee has been data dependent. I do expect Kevin Warsh as an individual to be data dependent as well. So depending on where that inflation data comes in the second half, and I think that's really important and probably underemphasized. A lot of focus on the labor market right now, and that's appropriate. But those inflation numbers, I think by the second half, are going to look closer to 2% inflation. And that's not just going to give Kevin Warsh the ability to cut interest rates. I think that will give a lot of members of the committee the confidence that they can bring rates lower.
What's the source of that? What's driving us back to 2?
Shelter cooling is where we have the most confidence. I think a lot of economists have that in their forecast now. We just have so many indicators. It's a soft housing sector. The housing sector is soft right now. Prices are soft. Rents are soft. But this loosening labor market should also give us confidence that inflation will come down further. And then finally, that tariff boost that we think is about 50 basis points in CPI and PCE right now, that should be dissipating by the
So let's just go with the shelter story, because when people like you explain the shelter story, it sounds so intuitive. It sounds like common sense. Okay, you've put it that way. I can see where it's going to be several months out in the official data. Why do Federal Reserve officials not share the confidence you have about the disinflationary tailwinds that are already coming down the pipeline?
I think there's a difference between different Fed officials, and different officials will be different places on this. Where I am, and maybe some of the more dovish officials are saying, yeah, we basically can forecast this thing 6 months to a year in advance. We know that it's going to cool down. I think there are other Fed officials that maybe also kind of know that we can forecast that, but think that the way they should behave is if we can't, because they think it's important to take a strong stand against inflation. You see 3% right now, and they think we're supposed to react to that 3%, not the forecast of where we're going. I react to the forecast. I think other Fed officials do, but I think that's a difference of opinion in terms of how you conduct monetary policy.
So in other words, this is about appearances. This is about appearing hard on inflation, even if they'll come down on the same side as the doves. In other words, do you agree with Kevin Warsh that people should just talk less and not really give forward guidance?
I do think forward guidance is, we're probably overly used to forward guidance because we were in these strange scenarios where you had to give guidance about keeping policy rates at the lower bound for a long period of time. So we should be moving away from that. In terms of this, is it kind of, optics talking about inflation? it's hard to make an argument that 3% inflation is a lot worse for the economy than 2% inflation. The target is 2%, so there is an optics reason that you want to be at 2%. If central banks were to do it over again, I think most economists would say probably we should have had a range of inflation that would have been acceptable. So I do think it's a lot about optics right now.
This is fascinating, especially because the person who is likely to come in to be the next Fed chair is an inflation hawk, at least traditionally, more than a decade ago. And people are saying people can change in that time. Do you think that he is also potentially going to accept 3% as a new 2% and be more dovish in the approach because it hasn't been a problem? And frankly, if people were to come back, that might be the more appropriate target.
Yeah, I'm not suggesting, and I don't think that Kevin Warsh is going to say that 3% should be the new 2%, that we should be changing the target right now when we've just overshot for multiple years. But I do think this idea that we can't be hypersensitive to is inflation off by, a tenth of a percentage point here or there. I think the more you kind of immerse yourself in this data and understand what the data are and all the issues in producing it and the different choices that we make, it's hard to get really excited about being off by a few basis points. So I'd like to see them move in that direction, and possibly they will.
To your point, though, Andrew, I think there's a realization on the committee that they can shape the events they influence. And they can basically sit here and say, you know what, we can shape the events we anticipate by saying things like, I'm not worried about inflation, could actually contribute to inflation. Yeah. Is that ultimately what you're getting at?
Yeah, I think that's exactly the concern. The reason I would be less concerned about that now is because we have all of these indications that we're not in an environment where we have a bunch of upside around inflation. And it is actually the opposite of where we were when Fed officials were saying they weren't that concerned about inflation when everything was supposed to be transitive. We had a tight labor market. We had wages that were accelerating, prices that were accelerating all over the place. All of those things are decelerating now. So I think you can be a lot more confident that we're going to get inflation lower.
Stay with us. More Bloomberg surveillance coming up after this.
Joining us now to continue the conversation, Henrietta Treyz of Veda Partners. Henrietta, welcome. Can we find an off-ramp here?
I think we can find an off-ramp for now. We have until Tuesday, as the speaker suggested. And they're going to try to move things forward tonight around 4, 5, 6 o'clock. I would say for investors, you brought up the BLS data. That's huge. There's also the IRS funding that lapses, and it's tax filing season now. But when I travel around and talk to investors, one of the questions I get a lot is, what's happening with the president's $2,000 rebate check? Are we going to get that for the tariffs? And I would encourage folks to think about the fact that we just ate all of January up on this conversation. It fell apart at the last minute, and now we need to spend all of February basically dealing with the same government funding bills and then a DHS package, and then we'll have the State of the Union. It's basically already March, and it's only February 2nd. So for the investment community, it's really focus on what will not get done because we're not doing this. We're not getting a second reconciliation bill. We're not getting movement on other items that the president talks about quite a lot.
Well, it seems like Leader Chuck Schumer, senator from New York, cut a deal at the White House, but it doesn't seem like Minority Leader Hakeem Jeffries in the House was privy to that. How big of a gap right now is it between the Senate leaders for the Democratic and the House leader from the Democratic Party?
Yeah, there definitely is a gap, and you can tell because there's not a vote for the rule as Speaker Johnson laid out. I think the disconnect between Jeffries and Schumer is unfortunate. It will ultimately be bridged. You saw the guys right behind Jeffries, Jim Clyburn and Steny Hoyer, saying that they're going to provide the votes for this package, encouraging their members to vote yes. So I think a lot of this also is to do with what we went through back in the original shutdown, which is really propping up potential Speaker Jeffries in advance of the next midterm election cycle, giving him an opportunity to really stake the ground, get more recognition, leadership from the conference on the House side. And I think that's what this is really functionally about.
Okay, so Speaker Johnson can find the 218 votes and we get back to the government operating as normal and we get the BLS data on Friday. They still need to figure out the DHS funding. They're going to have 2 weeks to do that. Do you see a deal for that new bill potentially that has to be drafted?
Man, I mean, they don't even agree on whether or not ICE should be wearing masks or have name IDs. You know, in the wake of the shooting in Minnesota, that was just a really immediate thing that Democrats gravitated to. I think you see it out in the ether as well if you talk to folks in Minnesota or anywhere else in the world where ICE has been inserted into these cities. They talk about the masks and they talk about IDs a lot, and video cameras as well. Getting early messages that Speaker Johnson's not going to agree to those three components suggests that we're in for a very rocky ride over the next 2 weeks. I'd be shocked if we were able to pull it off without having this bleed into, another 2 weeks.
Henrietta, I have to say, none of us sound excited about talking about a government shutdown. Pretty much, you can just feel the pall of exhaustion fall over the conversation as soon as you say the two words, government shutdown. I just wonder if we're moving to a phase where we can stop this kind of piñata or this kicking the can down the road where we're always talking about this. Maybe it's 2 weeks, maybe it's 1 month, maybe it's 2 months. Are we going to get out of this, or is this the path of travel for the foreseeable future?
I think welcome to a midterm election year. Look at some of the special elections that just took place. There's one in Texas where the swing was 31 points away from Donald Trump. And I think what Democrats learned in October is that as long as they can steer the message, they're winning elections. So I don't see a reason why this would necessarily stop. The good news for investors is that once we get BLS done with, it will be done with all the way through September 30th. So we can talk about DHS, but it won't necessarily be, hey, when we get the employment report, hey, is the IRS going to be able to process refund checks? And investors can sort of tune out a little bit. The immigration narrative in an election year, I mean, come on, that's a tale as old as time now.
There's a sense also that maybe President Trump is looking for more concessions when it comes to not just getting the budget through, but also getting his new Fed chair picked through. And there is the potential for maybe the lawsuit to be dropped against Fed Chair Jay Powell about the renovations. I'm just wondering how realistic you see that process in being stymied, whether you do see a potential path to get Kevin Warsh as the Fed chair by May.
I've been working with Senator Tillis's staff for a really long time now. They have very high conviction. I do not think he is messing around. When he says, I want this case dropped and I will block all other nominees and all other considerations at the Fed, you should take that very seriously. So he's going to need to get that concern addressed. We have many months before we actually need to replace Jay Powell, and they're going to probably take all of those months. The president will have to capitulate. We saw the markets respond sufficiently to give him a message that he needs to drop this lawsuit. Jay Powell delivered a very forceful rebuttal to that in real time, as we all saw from that video. I would take that incredibly seriously. I don't think Senator Tillis is going to get rolled on this in any way, shape, or form. He's just getting louder, if anything else. So I think they will need to address that. It'll probably take some time.
And he made that point when he joined us on Friday, Henrietta. But once the DOJ investigation does get wrapped up, and once likely Kevin Warsh gets through his Senate Banking Committee, how does he play on the floor? Do you think Democrats vote for him as Fed chair?
I think so. I think you'll have a lot of aisle crossing. I think that is generally the direction of travel here with this particular nominee. You probably would have seen much fewer votes, maybe even a 50-50 split on a Kevin Hassett, for example. But judging by the temperature of what I picked up this weekend from staff on the Democratic side, there are going to be some lingering questions. There's a lot of random stuff in there. But as somebody who's already been in a similar position, has already gone through these approval processes, I think that he's on a path to getting bipartisan support.
Right. In 2006, he had a voice vote, and he pretty much sailed through unanimously to join the Fed. And Henrietta, I just wanted to end on this point because you sort of mentioned it earlier. What went on in Texas over the weekend? I know it's just a state Senate seat, but how this Democrat won in a plus 17 Trump district when he was outspent and outraised money-wise, is this a harbinger, do you think, for the midterms, or is this just a special election?
It is a special election, but the midterm cycle and this pre-midterm that we're in right now, we've been in since November, is highly predictive of electoral outcomes. And one of the things that I've been concerned about for Republicans all year is their effort to redistrict. Redistricting is all fine and well. You do not do that in a wave year because Dems have already wiped away the potential advantage. I think it's one seat here or there that you might see any kind of plus up versus what was happening when we started this year. Now you're looking at a wave election. They diluted their districts, so they're not solid red anymore. They tried to eat into some of the blue spots. If you're getting a plus 31 in the Dem favor trajectory in a state seat in Texas, you got a problem. So the primaries, I think, are really fascinating to watch right now between Cornyn and Paxton, for example. How that's going to play out and what it's setting up for the general, I think, is going to be really exciting for anybody who cares about elections to watch. These are big swings we're talking about.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.